And I want to thank Dilip for the good introduction, because this is 19 and 20, where in the Global Compact for Migration, a document that I would suggest for those that don't have it to look at. We just heard about 19. We're going to go into 20. And if you ask me, what is Objective 20 of the GCM? I call it more about the back office or the back end, or how to get there objective, because it talks about the actors involved in making sure that money goes from point A to point B effectively. Basically the service for 1 billion people in achieving their objective of supporting their families back home. That's what it's all about. It talks about the public sector, what role they should play, what the private sector should do, what the civil society should be engaged, and it's a recipe. But my question, and I would like to have a really an open discussion today, is, well, we have the recipe, we have the ingredients. Do we have a recipe? And if not, what is it that we really get into there? So to answer these questions, we brought some of the key partners, let's say, that are, or stakeholders in setting this recipe of the private sector. We have commercial institutions, so represented by equity. We have the money transfers, represented by Veronica, and of course mobile money, represented by GSMA. And then we have the donors or the development organizations like IFAD, but we have SIDA here to try to understand what can be also the role of the public sector, particularly in supporting this. So if you're not familiar with the global, with the GCM Objective 20, just to give you an overview, a very quick overview, what are these ingredients that we're talking about? We're talking about a roadmap to reduce transaction costs. We're talking about getting together. It actually does mention the GFRID and DFR. I think we can tick that objectives. We're here discussing this. We're talking about harmonizing remittance market regulations, increase interoperability. I'm just summarizing because the text is a bit more longer, but that's what it includes. Establish conductive policy and regulatory frameworks towards more competitive remittance markets. This is where, in that recipe, we believe the cost will start going down. Develop innovative solutions for remittance transfers. Provide accessible information and data. We talked a lot about that. Program and instruments to promote investment from remittance senders. How financial literacy is essential in this recipe if we want to have all these instruments used by senders and recipients. So these are some of the key aspects. And in this round of discussion, I would like is to have from the industry first, their stand. Where are we standing in respect to these objectives? They're there at the last International Migration Review Forum, as it was mentioned by our colleagues from IOM. There wasn't much on the results, maybe because we couldn't measure those. We know we have advanced, but I would like is directly to get it from the industry. So if okay, I will start with you, Veronica, from the money transfer organizations that are so essential into this ecosystem. What is your take on some of these points right now? And in the second round, I will have a little bit more about sort of recommendations, what we would like to see change in not only achieving this, but measuring it as well. And it's a little bit of the same question for the rest of the stakeholders in the industry. Veronica.
Good morning to all. Thank you very much, Pedro. I think I will start with the first question you made. Do we have the recipe or do we have the ingredients? We do have the ingredients. We still don't have the full recipe. We are working on that, but we still don't have it. We are now working on achieving these goals, but we are not doing well. And that was very clear during the conversations we had during these 2 days and a half. We still have to do more. There's one thing I would like you, and there's one thing I would like to highlight, and I think it will help us to understand why we are not progressing as we would like to progress. this industry, the remittance industry, is an industry that has been built by migrants to serve migrants. And you know, when we are talking about achieving the goals, migrants don't know about the goals. They just need to send money when they need it and they want the family to receive the money. That's what they want. They trust who send the money. They don't even ask, do you have a license or not? They just want the money to be there when they need it for the family. So, and that's why I think that we are not always working right, because we are not always putting the migrants first. And that's what we should do. If we do that, we are going to be able to innovate, we are going to be able to do all what we have to do, and we will achieve the goals. But if we are not putting first, let's think a bit back, why we don't have still the full recipe. I think that is important. We need to think. I mean, we need to think who are the customers, who benefit from this. There's a reason why we have International Day on Families Remittances, and why it's not remittances itself, it's families. We need to think about the impact we do and how do we help them. So I will start like that. I could continue, but I will, that's it. Thank you.
Thank you, Veronica. I think we're starting to have a glimpse of some of the issues and the tendency, and as we heard during the last 2 days, why are we not there yet? One of the things that we heard was also regulations, the enabling environment, sometimes not being adequate, or its interpretation. So as we see a lot, and particularly after the pandemic, the rise of digital money, there's a hype, it's true on that, but the figures still say that it is a small fraction. So we believe it's here to stay, but it is still small. How can this grow further? What do you believe can be the barriers to that? So it would be very interesting, Kennedy, if you can tell me what are the major barriers that you see in that regard, as indicated also in the objective, because this is one of the objectives, to increase digitalization of remittances.
Yeah, Pedro, I think that's an interesting question, because again, speaking for the private sector, you know, the private sector can only work within a regulatory framework that it allows it to operate in. I think speaking for the mobile money industry, the numbers speak for themselves. Mobile money has been able to lower the cost of, you know, sending money across borders for quite a while now, and consistently. And I think that much is within what the regulations permit the sector to be able to do. But now, looking at some of the challenges we've seen within the sector, one of the biggest one becomes the issue, of course, of being able to send money outside certain countries, and I'm speaking about Africa in this case. Most of the migrant workers that move across Africa, for instance, of course, move for the sake of, you know, trying to look for a better life and sending money back home. But upon moving into some of these countries, the first impediment that they face is the fact that they can make money, but they cannot send it through a formal means back home, because the regulations do not permit the service provider to be able to provide the service. Again, it has been a challenge for quite a while. It's a conversation that has been taking place for quite a while, and there's little traction on that. But then again, of course, as a sector, we appreciate the fact that some of these issues are very sovereign in nature, and perhaps as well, central banks may not really have the complete say on some of these issues. That said, we are seeing a number of, you know, regional economic initiatives, such as AFCTA, which are trying to drive trade within Africa, for instance. And we see an opportunity for some of these issues to be handled at the executive level. So I think that would be one of the things that I would actually pinpoint. But then again, secondly, I think there are also other overarching regulatory challenges that we are seeing for the sector, which have a ripple effect back to the migrant worker. And here I would like us to have a picture of a woman, for instance, who just moved from one point of Africa, for instance, to Kenya, for instance, to look for a better job. And this, we're looking at somebody who is looking for a casual job. The taxation policy for most of the region has been quite stringent lately. And I think the reasons behind it are well understood, because again, Governments are supposed to make revenue. There's domestic resource mobilization obligations that governments have to meet. But we're also seeing a disconnect between financial inclusion objectives, including those for the migrants, and some of these fiscal policies. So there's a ripple effect to this that needs to be addressed. Again, I think room again for discussing some of these issues. But taking it slightly broader to other regions, I know Africa has progressed quite well when it comes to mobile money services. When you look at how the sector was over 15 years ago, the reason that mobile money picked up is because regulators permitted non-banks to get into the space through what at the time was a test and learn approach. But in some of the markets that we are seeing, there's still a bit of restriction on non-banks to be able to play in this space. And more particularly, if I could also speak about the fintech space, we are seeing a challenge where regulations are now really running in tandem with the innovation within the sector. And I think there's room to also permit for some of these newer players who are coming into the place, including, of course, mobile money providers, to be able to play a more active role. I think collectively, if all these issues are addressed, we could be able to move the needle when it comes to the issue of, reducing the cost of using, sending remittances for migrant workers.
Thank you for that. It's interesting because every time we're talking, we focus about the cost. Of course, this is the first one, and from a business perspective, well, there's the gains and there's the costs that it gets me, and I want to make a margin on that. And it's true that we focus too much on this. How to facilitate? What is so interesting about digital money is the myriad of other services that you can link to it. And I noticed during the forum that one of the elephants in the rooms was the linkage between remittances and financial inclusion that felt somewhat falling in through the cracks. At GFRID, we believe that this is the biggest development impact, even greater than what remittances are doing, because for the majority of people that are receiving remittances, they're not acquainted with financial services. And we know how strong this can be for empowering families that now have access to financial instruments to be more resilient, etc. And why not needing remittances one day? So we could have remittances create a situation where these are not needed anymore. But for that, they need to be bundled. And I think digitalization right now of remittances, mobile payments, allow you to get closer to that, particularly when we look into rural areas. This is where we're really trying to focus, and it solves a lot of the problems. But it comes down to financial services. So I would like to go to you, because I had a discussion with you last night, and it was extremely interesting because, as we were discussing, many banks, many years ago, were offering the remittances service at zero cost in the 90s. There's an SDG that is calling it to reduce it to 3. We heard that we will not be able to achieve that objective if we follow some sort of recipes. How can banks in the 1990s, I'm going to say 1993, was able to provide remittances for free? No banks give money for free, right? So, well, because they saw value somewhere else. They saw value in the people behind those remittances and offering other financial services. And the cost of remittances was just a small price to pay, call it marketing, to increase their client base, to have those. And I think the dramatic change we're seeing that remittance recipients as customers. And I think this is still a mentality that needs to approach. So I know Equity is looking into that direction, and you've been leading that. So I wanted to have your point of view into this particular aspect.
Thank you very much, Pedro, and that's a very good question. And what I'll say, financial inclusion in Equity Bank is at the center of what we do. When you look at remittances, we look at remittances from broadly two perspectives. The first one being the capability that we create and the rails that we create to enable Kenyans or any resident of any country out there to be able to A, send money back home, B, be able to save over and above the sending money, and of course, be able to invest subsequent to that. And that is one part of the remittance that we normally look at from a remittance perspective. Then the other one is where then we're able to remit funds to what you refer to as vulnerable communities. For instance, a very good example is what you call the Hunger Safety Net program, where you find very remote areas that the government or institutions need to remit funds to. And the question is then, how do you manage to do that at the lowest possible cost? And technology then becomes very, very critical. I think if you look at multinationals have moved away from the aspect of maybe giving food, for example, and they're saying, you know, you can imagine somebody now queuing with a plate to go and get food. We are saying we need to give these people some level of dignity. And so when you give them money instead of the food, and then you make that ecosystem, say it's a refugee camp, for example, be self-sustaining. So as they're receiving the money, remittances are coming in, then you create an ecosystem where they're even able to do business. And better still, we've even seen in our model, the same people even being able to access loans, for example. So you're able to give financial services to those people, financial solutions at the lowest possible cost through technology. And so technology is one of them. Then the second one is, of course, the rails that you create. Now, to be able to create effective rails to reach out to these people, you require partnerships. Because, for instance, if you are getting funds from maybe Middle East or Europe or even North America, you need partners out there who will be able to integrate to your system and be able to effectively remit that money at the lowest possible cost. Today in Equity Bank, we don't charge for that, but the cost that then we get from the other side is the only cost that we pass on. Why do we do that? Not that we don't want to make money. To your point, we know that by banking these people, the recipients, then we'll be able to create a customer base that will be able to grow. And remember, as they grow, you also grow. So investments and being able then to help these people be able to develop themselves as individuals, because when you have that financial inclusion, as individuals, they develop. If you look at remittances globally today, you realize that GCC is becoming one of the dominant players in that space. In fact, so much so that today GCC statistically in this region has even overtaken UK, which was the second remitter of funds into this country. So after North America, it's GCC, the Gulf countries, and then Europe. And what we are seeing is that the individuals who are sending funds from GCC, which is the Middle East countries, are primarily unskilled and semi-skilled workers. Now, how do you integrate these people into the formal banking space? Because this is your typical nanny out there who is working. So one of the things we are looking at is how then we can actually be able to have like pre-departure training on financial services, so that by the time that lady, that gentleman goes out there, he already has knowledge on how to open an account, how to be able to save, and even how to be able to invest. So to your point, we are looking at that and saying how then we can be able to help diasporans out there to better manage their finances. Thank you.
Thank you. Thank you very much for that. I think we're recording, so I'm going to cut some parts of what you said and tweet it, because I think there's a big message to pass in there. But I liked, you're really making my life very easy here, because the next point on that, on what you touched upon, was the partnerships. I remember when I was acquainted, I think at the same time as Dilip, to this issue, it was very easy when I was asked the question, what is the remittance market? There were two names. One had much, and the other one was trying to grab a little bit of a piece. Today, I remember I saw a slide from DMA at some point just about a corridor in the UK, and the page was full of logos and arrows going everywhere. And we saw basically partnerships that, well, is there possibilities? Can money transfer companies work with commercial institutions, with mobile wallets? Are there partnerships that are effective, where there's win-wins? And, well, they need to be tried, I think. And you need to promote those partnerships. We need to push the system, because at the end of the day, the private sector does the job. So I'm very happy that now that leads me to how to stimulate this. SIDA and IFAD have been testing. You've seen the chronos out there, some of the projects with private sectors. And then what is the role? How can we push more of this of the private sector to basically go into win-win situations. I wanted to know from SIDA, what do you think about that approach, about the role of the public sector and particularly development institutions in making this work?
That's a good question. And I'm very happy to hear from you guys because as a donor, as a development agency, we rarely, which is sad, listen to you to address all the challenges that you have in order for some things to happen. Because I think as a donor and a development agency, we have responsibility and we have certain possibilities, but we will not be able to solve all the problems that we are facing here. So there is a real need for partnerships. And addressing the real issues and identifying the gaps is very important. And sitting down and forming those partnerships and seeing where is the need for the donors to come in and which parts can we support with the money that we have, with the instruments that we have, with de-risking, revolving funds, to make your life easier. Of course, being a development cooperation, we have a great opportunity of influencing the policymakers and bringing the dialogue issues that you're bringing up. And I think there we have a role to play and help out with the gaps that you are facing. I also do think that we could do more in capacity building around the issues for the companies and people who could potentially be bankable one day, but also in researching and seeing, you know, where are the gaps and who could address what in the space that we're operating at, because we do work together. And I mean, we do have collaborations with banks as a development agency and private sector. And I do think the innovations and the real things are happening where you are, but we can certainly support. Just tell us, where do you need us? Knock to my door and we can talk. Yeah.
Thank you. And again, it continues to be very easy because then the next question here is, we talked about the ingredients. Who's in the kitchen, really? The role of each in the kitchen and what do you need? I can see the information, the data. One of the objectives is better data. We discussed a lot this today. It goes beyond what we have. We need more granular data, but if we can go around that, we need to know better the customer, the nature. If you're a financial institution and you think that this might be your client base, you need more information. I think for the senders and recipients, the same. If you want to tap new markets, on mobile money, the same thing. So maybe we can have just, what is the type of data that makes your job more useful?
For us, data is crucial.
I didn't want to mention useful, sorry. It's another word I wanted to say. Easier, sorry.
Yes, for us, data is crucial. So we need data on cost, flows, corridors, formal and informal we can capture. And another thing you mentioned, partnership. Yes, partnership is essential as well. We need also, which that will help us also with data as well, because we need, for example, partnerships where we can not just have the conversation, but try to solve the issue of debanking or bank de-risking. We've been talking about political will for many years. Many times, you know, when I raise this topic and I go to organizations, the first thing they say to me, can you quantify it? When you can quantify it, you can come back and we will discuss it. So that data is also something that we need help to collect. And I know it's not easy, but that's another example how data can help us. But yes, for us, technology, we have it. We do have technology. We know it's there. We need to know how to use it. So if we have that data that we need, we can implement that and really make an impact. So, but the other thing is, where's the data? How do we look for that data? Sometimes we don't even know if the data exists, or sometimes it's even duplicated. So that's why we were talking about, if there was a mechanism that we could say, okay, collect somehow the data in a unified way and work at it, because then we have we need also to work with the regulators because, for example, each regulator might collect the data, have a different methodology. We discuss all this. I don't want to repeat much, but those are the things that we need from the private sector in order to make really an impact and yes, create the impact we want to do and put the migrants first. So I think I will continue even later.
Thank you, Veronica. And then I will go to Kennedy in terms of this, the partnerships and the data, if you can have a compound answer on that, your views.
Yeah, I think just starting on the data, obviously the mobile money sector has a lot of data, but the question is always trying to understand what kind of partnerships would take advantage of that kind of data and make it valuable, and is it happening? So the question is yes. I think the mobile money industry is currently partnering with many technology companies. Of course, it's on a case-by-case basis. It's not, of course, industry-wide. So if we could talk about some of the players in Kenya or Nigeria, they have independently gotten into partnerships with technology companies that can be able to give them data that perhaps, for instance, can be leveraged for credit scoring. I'd speak of an example of organizations such as Jumo, which are not traditionally mobile money players, but partnering with the sector to be able to offer, competitive digital credit services. Because again, ideally, when you look at the kind of data that mobile money operators have, they have data for consumers who do not have banking services, yet they want to be able to leverage credit. And if you're looking at a typical migrant worker who's looking for a mere casual job just to send money back home, chances are high that they do not have that data to be able to get a loan from Equity Bank, for instance. And so those partnerships are in place, but I need to point out the fact that what we've also seen as a challenge is a data protection regimes for some of the countries that some of our members operate in. And when I look at the issue of data, you cannot have a conversation on data and not talk about cloud computing, for instance. Cloud computing can only happen whenever there's allowance within the sector to be able to send data cross-border, for instance. But most of the regimes that we have in place have a restriction on, moving data out of a country. So we're talking about data localization. So these are some of the impediments that we are seeing that could, create a bottleneck on the issue of data and data sharing. But that said, I think partnerships are key. And the mobile money sector cannot in itself address all the financial inclusion issues. I think, again, we also need to have that conversation around, financial inclusion versus financial depth. Most of the regulations in place only permit mobile money providers to provide payment services. They're not allowed to intermediate customer funds. So for a telco to be able to offer credit, they need to partner with Equity Bank to be able to do that. And so I think for that to be possible, collaboration is the only way. And I think looking at where the sector is heading towards, it's only going to survive with collaboration, and no sector can actually survive on its own.
Great, thank you so much. Is there a connection? Do you see value in connecting with service providers in that, or it is a tough world where no, we don't need to do it all?
Absolutely, there's every benefit in collaboration, because when again to my example of you want to be able to assist diasporians out there to be able to remit money back home. You wouldn't be able to do that. You can just walk into a country and start doing remittances. You need license, and you cannot be a jack of all trades. So you need collaboration. People in those markets who will be able to, like fintechs, you'll be able to integrate with, and then you'll be able to remit money back home. So collaboration is very, very critical. And again, data and information, the right information and the right data to be able to do that. Because you find financial services, financial products, it's not one size fits all. You'll find financial products, for instance, that are highly consumed, for example, in North America, may not be the case in the Gulf, for example, or even in Oceania or the rest of Europe. So you need data and information to be able then to come up with the right products and the right services. And subsequently, if you achieve that, then the cost of remitting that then comes significantly low. Yes, so to your point, Data is critical, and collaboration. Collaboration, you can't do it on your own. You cannot be a jack of all trades. It will not be possible. You might find yourself spreading yourself thin and not be able to be effective in what you attempt to achieve. Thank you.
Thank you. Indeed, it is a mindset. Understanding remittances at public sector level, we've been hammering remittances, our SDGs are not consumption, as we were saying on day one, is a mindset change. I think every actor or stakeholder in the industry is also having his mindset change. It's great to hear that commercial financial institutions are looking at it in a different way. We're looking at the people behind. We're not just manipulated by the dollar sign, the euro sign, or whatever that sign it is the people behind it. And the potential that it is actually greater than the billions and trillions we're talking about. And I think this is the most important message. So yes, the partnership, I understand having more data to be able to do that. I would like to give a few minutes later on for a question, but I want to answer this one. How does success look like from your standpoint? From a commercial financial institutions, from a mobile, I know maybe I can go to the questions while you think of that. Mobile money, money transfer companies, a donor, a development agencies, and we hear and we look at this, success in the cake or whatever we're baking. How does it look like from your perspective? I'll let you reflect on that, and I will open a question. Ooh, there's already too many hands. We need to finish soon, and I'm going to have 1 minute to each, so I'll just take 2 questions. Who you are, who the question is, if it is an open, no statements, please. Just the questions. Raul, I will go to you. I saw the lady first, so please, if you can open the mic, and then I will go to the next question.
Hello, good morning. My name is Anstella Maina. I work for the Refugee Investment Network. We're based in DC, and I'm the Senior Director, East Africa. So I have a question to both the private sector in terms of Equity Bank Group particularly, then for CEDA. So there are new innovative products such as outcome funds that development agencies are trying to implement as a way to be more sure that outcomes are going to be met when they're still very keen on financial inclusion. But my question here is, how can development agencies such as CEDA, as outcome pairs for projects, partner with institutions such as Equity Bank as what I'd call them like the capital, they'll inject capital into projects, then CEDA comes in and pays for those outcomes. So how can that be more collaborative? Because I'm seeing there's a trend with development agencies looking more towards outcomes and stop focusing on initial investments into projects. So how can those people come together? And how can, for example, Equity Bank, your investment wing, be more involved with the CEDAs to make sure that on one side, you're investing into projects, on their side, they're paying for the outcomes of those projects.
Thank you. Thank you. Raul?
Yeah, Raul Hinojosa. I'm a professor at UCLA, but I also have been a pioneer in creating zero-cost accounts in the United States, doing zero-cost remittances to Mexico. The key thing there, as Pedro is that you need to have a partner bank on the Mexican side that understands how to actually cover the cost of the remittance, because there is indeed a value to the inclusion. So financial inclusion pays for itself. That's just beginning in Africa. We actually send to over 100 banks in Africa looking for the partners that can do that. Maybe equity is one. One issue about Elena was bringing up, we're working with Bill and Melinda Gates Foundation to help finance technological innovation that does clearinghouses for the rural development credit unions and microbanks. That is doubling the amount of people that can receive payments. So that's a really important role that I think that development agencies can invest in, and seeing it rather than a sort of an aid, but working with the private sector innovators that are really focused on getting this not only the cost down, but more importantly, you get the cost down by having true financial intermediation and inclusion on both ends.
Thank you. There's a question, if I may, would like to see that, because it goes on to that, is partnering with the private sector. Why one way or the other? What are we trying to do in getting involved, let's call it this way, with profit-making institutions? Where's the rationales behind that?
That's a good question, and it's a difficult question, but I think I'm the right person to answer because I'm the banking person at CEDA, basically. So I'm the one who would work with Equity Bank and structure some kind of programming around this. And your question, it's not an easy task because we don't support private sector directly, and I'm very humble in regards to what Equity Bank has achieved in their operations and through the Equity Foundation, and how much of research and work you've been making to reach actually the most vulnerable people. So every time I meet with a bank to discuss some kind of idea, I'm always humble in regards to how much you are doing yourselves, and I'm learning quite a lot. As a donor, we have to be very careful not to disturb the market, to make the market to come up with the solutions that will be solid and sustainable. And the result-based financing is something that we do. We've never done it with a bank. I think there is a potential of looking into how a bank can deliver on certain things and we would be paying part of the results. I think it's interesting. I would rather do some kind of de-risking, and I know that Equity Bank were the first one to work with refugees, for example, in Kenya, and we have developed a similar program with another big bank here. So I'm thinking more of de-risking more of your work, capacitating the target group, the bank, and partnering in that way. I think it's much more easier and much more sustainable from my perspective.
Thank you. What does success look like? I would like to ask Veronica, Kenny, and
Financial inclusion should not be the goal. Financial inclusion should be the tool to financially empower people in a sustainable way. I think this is what the message I would like to say. And we should create for that an ecosystem where we can compete in a fair way, and we will achieve that. But it should be financially empower people, the migrants, the beneficiary of the remittances.
thank you. Great. Kenny?
Yeah, so I think for me, I'll split it into three. So of course, commercial sustainability is important. And also just being able to ensure that policy objectives such as financial inclusion are met. I think that is key. And then number three, the customer has to be happy. Let us make sure the customer needs are taken care of, because at the end of this whole conversation, this is the most important person. So if everybody in these three categories are happy, I think that's successful.
Thank you.
Yeah, thank you very much. I think...
Yes, please.
Okay. Thank you very much. What does success look like from where I sit? I think when I look at data and ask myself in terms of how we've been able to grow our customer base, for example, and improve those individuals' lives, because at the center of what we do is changing lives and livelihoods. That's at the center of what we do. And so in whatever we do, we always ask ourselves, how sustainable is this? How scalable is this? And then in terms of even what these people are doing, the customers who are out there, the capability to be able to invest back home is very, very critical for us. And my last one is when I look at data, for example, from statistical bureaus and the Central Bank of Kenya, and I look at the remittances, so to speak, and then I look at my numbers, the growth in those numbers to me means a lot, because then it means I'm making an impact into the remittances of the country. And we're looking at the latest statistics. It shows that remittances, foreign remittances into this country have become so predominant that is actually the highest foreign exchange earner into the country, over and above the traditional sources of tourism and horticulture. So to your question, success then means how much of contribution as a bank are we plugging into this? And and finally, of course, the people who are receiving the funds from their loved ones out there, the capability to be able to include them in the banking sector so that then they can actually be able then to have their lives changed. And when you review that over time, you realize that you've actually made a big impact into their lives. So thank you.
A win-win, in other words. Thank you. I would like to ask Sida. Sida and IFAD share sort of the same DNA at the end of the day. How does success look like?
You cannot ask a city person about the success. I'll tell you that the success is what you said, that remittances will not be needed for people to survive on a daily basis, that this hand-to-mouth thing is not anything that we want in Africa, you know, in 10 years' time, that they're used more productively, invested in businesses and lives of people who could create jobs, sustain themselves, and the market could be more kind of regulated and used in a more productive way. So of course it's about the people.
Thank you. And if I may contribute to what you said, for me success looks like what already happened many, many years ago in other places that went through the same thing, where they don't actually call it remittances anymore. People have been in power with that. They've been more resilient. They were not pushed to migration than remittances. I think this is what we're seeing, and history is on our side to show us that there are win-wins. It can happen, but I think it's the mindset of all the ones in the kitchen that needs to be aligned. So I wanted to really thank our panel for this discussion. This is going to make it into our outcomes of this GFRID for this year. As I want to just remind the participants, we will have the outcomes this afternoon after we go through to the awards. We're going to recognize the private sector, the innovations that are mentioning in the Global Compact. They're here, promote more innovation, etc. You know, the solutions, the win-win solutions, and then we will step back and look into what we have learned over the last 3 days and condense all this. And we hope that you all be part of this. So I wanted to thank you. Sorry for the delay. We're going for lunch, and happy International Day of Family Remittances to all again.